Hello everyone, this is Ross Mullins with YourDailyAnalysis.com, and this is your free daily video. Going to get started today on the pound dollar, and I'm going to start here on the daily chart because I want to point out the previous trend, the downtrend from October 2011 through January 2012. This is significant for the Fibonacci retracement levels. If you take the fib levels from the lowest low to the highest high, you find the 0.236 fib along this top pink line right here at 59.45. It's significant because that's where the current market is finding resistance. Even though we've seen a breakout of the flag pattern that we've talked about over the past few days, we've seen resistance now of that breakout into that 59.45 level, which is where that previous 0.236 fib is. So that's significant for the intraday resistance. Only on a break of 59.45 and that 0.236 fib level will we look for a continuation higher into the upper 6,000s or even into 6,100. So this is a key resistance today into 59.45 as we see it here on the daily chart. We have broken the flag pattern. The current uptrend went into a pattern here of sideways movement or ranging or channeling and has now broken through the top side of that pattern. If we go down to the 4-hour chart, we can see that break and how it happened. In the previous pattern, we saw lower highs and lower lows. In the most recent days, we've seen a change in that pattern. We've seen higher highs and higher lows. So that gives us a chance to look for that continuation of the current uptrend that's been in place since the beginning of the year. There's that 0.236 fib sitting up here at 59.45, and we can see here on the 4-hour chart how that has shown resistance and dropped the market back down just a little bit. I've redrawn the current uptrend line, this blue trend line, to signify this current leg of the uptrend. As long as it stays above this blue trend line, I do think there is a continuation higher. But we could see, since it's finding resistance here at the 59.45 resistance, we could see a pullback to that trend line. I wouldn't be surprised to see a pullback down here towards the 1.58 80s and 90s. We have historical resistance here, highlighted here with the blue level. We have a 786 fib of this current uptrend sitting here close to the 58.90 level. So that 786 fib, these historical resistance right here, and the trend line tell me that there's likely support here. So if we see a pullback from the 59.45 level all the way back down to 58.85, that will give us a buy opportunity in the direction of the current trend. If it doesn't pull all the way back down here to 58.85 and just breaks through 59.45 and open and close above there, preferably here on the 4-hour chart above 59.45, will give way to the next leg higher, probably pushing into the low 6,000s. 1.6030 becomes your next resistance target. That's about 100 pips up from that break of that 0.236 fib. So intraday, I'm watching this 59.45 area to be resistance, draw it back down here towards the 58.90s, give us a potential buy opportunity in the direction of the current trend, and then we'll look for it to take another run at 59.45 and hopefully this time on the second attempt break through here and continue higher. If we take all that down here to the 1-hour chart, it doesn't change the perspective very much. There's our next potential supports down here into 58.85, 58.90. There's your last resistance over here on the left-hand side. We all know that resistance can show us where potential support will be. So down here into the upper 5800s, we have the trend line in place to help us also identify a level of support. We have 58.90 as the 786 fib of the current uptrend range. 618 of that same trend range sits down here at 58.38. That is, of course, a secondary support beyond the 59.85.90 area. If the market does take a stab all the way down to 58.38, that also gives us an opportunity for a buy just a little bit lower, and we have to pay attention to that if we get some decent momentum to the downside. But for now, I'm going to be watching it here on the 4-hour chart for that open and close above 59.45 to signal a continuation higher. A dip lower into the 58.80s and 70s will give me an opportunity to buy in the direction of the trend. Very similar to what happened here. We saw the previous uptick of this trend, a little bit of a dip lower, and then the next rise. So we'll be looking for a similar pattern to develop here. We've seen this current uptick of the trend. We'll look for a dip lower and the next rise in the direction of the current trend. And all of this is taking place on the breakout of this previous channel or range that we recognized as a flag pattern here on the 4-hour chart or on the daily chart from the previous uptrend that we saw on the daily chart. That flag pattern developed after that uptrend. Keep in mind, though, this 59.45. I want to go back here one more time to the daily chart. That's going to be a key resistance area here. Could draw it back in the intraday. Any break of that 59.45, we look for a continuation higher, possibly all the way back up into 6,100. Thanks for joining me for this free daily video. If you would like to subscribe to my premium service where I cover analysis for 7 major currency pairs every day, you can start your 10-day trial by clicking the Get Started button below. And feel free to leave any comments you have about today's video in the comment area. Have a great day in the markets.